are so many acute issues. You and I could talk to midnight tonight and not cover a lot of them still. There's that many social, political, and economics. Listen, if it's not the debt, America's going, I'll rattle them off to you because I know you don't have the time, but I'll just tell you what's real important to me. The second biggest problem is a retirement crisis. 65% of Americans are working paycheck to paycheck. They're never going to earn enough to retire, and that is going to create all sorts of issues. The third major issue now is, which most financial people are ignoring, and maybe because of where you're based, you'll say no, more people over here are focusing on it, and that's what's happening with BRIC nations. We're having countries, many of them multiplying as the time goes by, looking to get together to form the trade and leave the United States out, the outside looking in. I personally believe this: within 1 to 3 years, the BRIC nations will get to a level what they will be doing or attempting to do with trade, which will rival what happened after our industrial revolution. That's how significant I think it's going to be. And America's outside looking in on that. So we can go on and on. I just don't see any justification to think that happy days are here again. And yeah, I mean, I know that's how financial advisors are trained. Interest rates are cut, the Fed lowers, they print money, everything works. Yeah, that's how you go from weight 100 pounds to weight 250. But when you hit the scale of 350 and the doctor says, if you put on any more weight, you're going to die. That's what we're getting to right now.
On this episode of the What the Finance podcast, I have the pleasure of welcoming on Peter Grandich, who's the founder of Peter Grandich Company. So, Peter, thanks so much for coming on the podcast today.
I was looking forward to it. Glad to be here.
Yeah, thanks again. So, I guess my first question is, what are you currently seeing in the economy? Because a lot of people have been talking about how they think it's struggling. We're going to see a recession, maybe even a stock market crash, but we haven't seen that yet. And it definitely seems like not much has happened in the past few months. Maybe it's just because so much has happened in the past few years. So what are you currently seeing?
Well, I've taken a broader, longer term look out, and it's petrifying to me. I've been at this 40 years, Anthony, and I've never really been scared. And I lived through the crashes, and I remember people saying it was, the end and all that. I never got really scared, but I'm very, very worried uh, for what we're facing. We now are completely out of control on the debt situation. People say, yeah, but you guys been saying that for years. Well, we were saying it for years, but we were saying it when it was 5 trillion, it was 10 trillion. No one ever imagined. I remember saying 25 trillion. How could it get past that? Well, not only are we real quickly getting to 34 trillion, we now have multi-trillion-dollar yearly budget deficits. Listen, I'm about to celebrate my 40th year doing this. And if you told me when I started that, I would tell you that's just a bad dream, Anthony. It's not possible. But we're getting so bad that our Congressional Budget Office earlier this year said we were on the track for 50 trillion in less than 10, and now they say that could be as early as 7 years from now, the way the government is spending. Well, people just have to just stop for a minute and just think, okay, 50 trillion, 5% interest rate, that's not a big number. Yeah, maybe compared to a couple of years ago, but on average, that's $2.5 trillion in interest expense. We only took in $5 trillion, a little over $5 trillion last year as our best year of revenue. It's unsustainable. We can't run the country off of the remaining $2.5 trillion. Not certainly the way people have grown accustomed to. And then when we look at the US, its biggest asset that it has on its book is student loans. And we have a president that's forgiving them. So we're even losing some of our assets. And what concerns me most, Anthony, is that almost everyone, certainly you, God willing, I'm a little bit older than you, but I could be, well, we should still be around 7 years from now. And we could be looking at something that's just unthinkable. It's still unthinkable, even though living through this. And no one's really prepared for it. And don't get me wrong, there's people that sell certain products. Look, I don't sell any product that benefits from that concern. I don't have dry food. I don't have cabins in the woods. I don't even have gold. Okay. It's not that I do. But we're going there. And I just see Americans, I still have a planning business. At one time, I did a lot of work with athletes, but even them 7 to 8 out of 10 families in America live at least one lifestyle above than their finances. Everybody says, how do they do it? Well, just look at the last personal income versus spending numbers. Spending was up 7/10. Income was up 3/10. Well, you can't spend $7 if you only have three unless you borrow the rest. And we're just acutely over the line on the debt level on all levels, consumer, corporate, government, state, and it's just out of control. And it's no one's going to worry about it in that right this moment, Anthony. Here in the U.S., between our Thanksgiving and New Year's Day, it is the don't worry, be happy's crown finest hour. Everybody pushes off about their weight, their finances, what my wife wants me to fix in the house. I'll all do that in the new year. But very soon, Americans are going to have to come to grips with this. And we don't have a political system anymore. I hate to be running on you, but we don't have a political system anymore that I have any confidence can fix anything. Not only do the two parties that are in charge don't want to talk to each other, but now there's factions within those parties that don't want to talk to other people in the same party. So I have a very concerning, bleak outlook if we look past the next several months, if you start talking about several years. Now, a lot of people don't invest long term anymore. Long term is at best a few months. But for those of us that used to invest with 3 to 5 year and more outlook, it's a very dim one that I have, unfortunately.
Yeah, no, thanks for running us through. It's fascinating to hear your opinion. I know a lot of people have been talking about this, and as you said, so many people push back saying that you've been saying this for years. You know, the economy it had this highest growth rate recently for years, excluding COVID. So a lot of people are just, I think, happy with that the Fed's landed the plane. Everything's going to be okay, at least in the short term. So stock market's going up. We're all very wealthy. It seems like that's sort of the situation we're in.
Well, see, Anthony, I operate under the belief, and these are my beliefs. People can believe them or not believe them. That's their choices. That there is a don't worry, be happy attitude that's part of the stigma of working on Wall Street. I like to use it as a joke, but it's an excellent reference to how I view it. And that is, you can toss most financial advisors off the top of our Empire State Building, and all the way down, they'd all say the same thing. Hey, so far, so good. There's just a built-in bias, and the financial media, which is mostly tied to their hips, they're not very independent. They're dependent on Wall Street for a lot of their ad revenue, and also I don't seek or turn on our main financial networks to think I'm going to get very objective opinions. But that bias is just beyond recognition now. I mean, there are so many acute issues. You and I could talk to midnight tonight and not cover a lot of them still. There's that many social, political, and economics. Listen, if it's not the debt, America's going, I'll rattle them off to you because I know you don't have the time, but I'll just tell you what's real important to me. The second biggest problem is a retirement crisis. 65% of Americans are working paycheck to paycheck. They're never going to earn enough to retire, and that is going to create all sorts of issues. The third major issue now is, which most financial people are ignoring, and maybe because of where you're based, you'll say no, more people over here are focusing on it, and that's what's happening with BRIC nations. We're having countries, many of them multiplying as the time goes by, looking to get together to form the trade and leave the United States out, the outside looking in. I personally believe this: within 1 to 3 years, the BRIC nations will get to a level what they will be doing or attempting to do with trade, which will rival what happened after our industrial revolution. That's how significant I think it's going to be. And America's outside looking in on that. So we can go on and on. I just don't see any justification to think that happy days are here again. And yeah, I mean, I know that's how financial advisors are trained. Interest rates are cut, the Fed lowers, they print money, everything works. Yeah, that's how you go from weight 100 pounds to weight 250. But when you hit the scale of 350 and the doctor says, if you put on any more weight, you're going to die. That's what we're getting to right now.
Yeah, it's interesting analogy. If before we get on to BRICS, because I find that a really interesting point, you're saying the pension issue that is occurring, I guess it's in the US, it's all over in basically most countries. What are you seeing? And then I guess, is there a way that countries can get out of this? Because I know lots of people talk about financial repression and maybe even making people put their pension in government bonds, and that's a way to fix both issues, which doesn't seem very good. But yeah, but can you explain it a bit further?
Well, Japan probably has the most acute because they're going to have so few people working compared to how many people that are retired. But here, even in the US, when you have right now, when you poll people 65 and over, I'm 67, uh, their number one concern is not dying, it's running out of money. I mean, that's something to tell you. And when we already know two-thirds are never going to earn it the way they're going, any type of retirement, what do? There's still going to be demands. And what's happening here, and it's happening even more in Canada, and in Canada and the United States have a lot of commonality, common grounds. We're seeing a development. It's going to take a few more years to be acute, but we're seeing a development of the battle of the ages, not fisticuff, but younger people are getting to the point going, boy, I can't afford a home. My taxes and everything going up. And a lot of it's going to these boomers, which I fall into the camp. And, they're getting all sorts of medical coverage and they're going to have knee opera and they're spending all sorts of money on our Medicare and all. And I don't want to do that. I don't want to keep seeing myself, well, how am I going to live? And then the boomer says, wait a minute, you took all that money from you all these years. Now I want to have that up. So we're going to have a battle of the ages. And what's happening now for the first time, and it's going to come more of an issue in the US over the next couple of years, the shift because of the boomers passing, that wealth is transferring faster now to the younger generation. And wherever the money is, the political power will not be too far behind. And that's going to be the challenges for the older group as younger folks become more politically savvy and more wealth oriented from wealth. They're not going to exactly look for everything that the older generation wants. So again, like I said, I could sit here with you for a few hours and go through issues that the United States and it be someone could say, well, he's just doing that because he benefits. Trust me, in my planning group, most of what you and I are discussing doesn't turn people on, it turns people off. So, but it's a fact of life as far as I'm concerned.
That's a great point to hear. So, what impacts will this have on the stock market? Because I guess a lot of people, even if they do have a pension, it's sort of in assets, and I'm assuming they're going to have to start selling that down once they retire and require the capital.
Anthony, one of the problems now is lifestyle. You know, there was a great comedian around at one time named George Collin. He had a great skit. It's still online. I encourage everybody from a financial standpoint to watch it. It's called Too Much Stuff. And it's a great line. And I like to describe that not only did my parents live in a much smaller dwelling, and not have credit cards, but they had no need for public storage. And now in America, on any really decent sized city or town, you don't have to drive too far down a road to see a public storage facility. Now, granted, some of that is not just people sticking their stuff there, people use that for business. But part of the issue is that people have a bigger lifestyle than their income. And one of the ways that they grew accustomed to that was an above average performance in the equity markets for years because of all the cheap money and everything was created. And they've come used to that. And there's an expectation, especially from the younger professional advisor, who basically has only seen that. And I don't want to switch gears on you, but let me use this point. It's very valid. The vast majority of US licensed financial advisors have only been practicing since the new millennium began, and almost 40 something percent now only since the last financial crisis in 2008. But let's just look at the vast majority, go back to the start of millennium. If you went to 100 of those people and said, what has performed better since the start of the millennium, gold or the stock market? 98, 99 would say to you, bet everything. The stock market. What are you, crazy? It's a relic, or whatever lines I like to throw. And then I show them the statistic, and I show that gold's up 693% since January 2000. The Dow's only up 263%. And even if you take the dividends they paid and bought more shares, it still underperforms the stock market. But the stock market in particular, financial assets in general, became a way of life for people, just as younger people now have gotten into thinking that cryptocurrencies is the only thing, it's the fastest road to riches and all that type of stuff. So it's hard for those people to change that. And the first knock, they get back up. Not everybody's able to get back up, but those that get back up dust themselves off and say that's a one-hit wonder. Sometimes you got to get that knocked down two, three, four times before you realize there's something wrong. That's what the stock market is going to have to go through. And we had a year where people would say it rallied, but that rally was so thin. much of the gains was on a handful of companies. It's great if you own them, but a lot of people didn't own them. So a lot of people are not going to have that year performance when they look at their 401ks and all that they hear about. If the market doesn't expand that breadth, if it doesn't see more participation in all, then it's in a danger of falling again. And of course, obviously, I'm in the latter camp to think that's inevitably what has to happen.
Okay, and then do you have a time frame on that? Or is this another thing that you're thinking the longer term that the stock market's going to fall?
There was a great newsletter, right, Anthony? His name was Jimmy Dines. He had a lot of great sayings, and one of his best sayings was timing. Think of the poor guy that invented preparation G, because preparation H was the popular one. I gave up on timing. I think it's foolhardy. Really, if you're going to just look in a crystal ball as a person on Wall Street, you better learn how to eat a lot of broken glass. I don't know the timing of it, but I'm very confident of some of the things you and I discussed happening. And that's all you can ask for in your planning and all, is make some very good educated guesses, use what you think is worthy foundations to it, and then act accordingly. And that's where I think that's at. And I think the other thing that people have to recognize and all is there are a lot of things now in the United States that just a couple of years ago they were insulated. Geopolitics was not in the decision making process for financial advisors for a long time in the US. But now, because of everything that's happening, including the BRICs and other crises around the world, Ukraine, the Middle East, Taiwan, it's now has to be, even though many are trying to push it off here. And how those things play out can also have a major impact on the markets.
Yeah, that makes sense. I think the US is quite insulated, I guess, from a few perspectives. You could say energy and geography sort of do help it. Maybe be protected a little bit more against some of these issues that Europe and other geographies might be more affected by.
Well, I'll tell you this, the number one growth industry in my book in the United States right now is crime. In wide areas of the United States, including rural areas, people have fears of crime that just didn't exist before. Even in my old neighborhood where I grew up in New York, we would have never been fearful of walking home, and crime is really rampant there now and all. Now, we have another problem here, and Europe has it too, and I think England does as well, and that is an immigration situation. You know, I feel personally, I'm in the middle of the road. I get it from both sides when I say what I'm about to say to you here. I feel for a lot of people that are coming here. They're coming from places that are just unimaginable that you can think that the average person has to live in that lifestyle. They're not bad. They are willing to try to come someplace, as a lot of times they have families and all, and they're willing to take whatever they have. And really, what they have is on the back of their, you know, back when they come here. And even though we may not think it's great here, for them it's phenomenal. Well, people like that are only going to tell other people that still haven't come, hey, you should come here too. And we're not going to solve it here in the US by saying, okay, we're going to ship them from Chicago to Los Angeles and send them around and go from red states to blue states and all. The situation is only getting worse. And now it's become so acute that even the side that many feel have disregarded it, the Democrats, have to address it. And it's going to be a part of the big political issue here as we approach our election next November. And it's not something, as you know, limited to just the United States. It's happening in a lot of areas. We're seeing now in Europe some countries, people rebelling because they figure they've been overrun by immigration and all. So, and that's a very delicate issue in a society now that has moved far closer to wokeism and relativism than how our past generations lived.
Yeah, it's an interesting point, and I think, as you said at the start, it seems like there's more divide. Maybe there isn't, or maybe it's just that we hear more fighting on the news and other platforms. But it does seem like there's more conflict, even just in our own countries between each other.
Well, I think you're right. I think that's a point that's where we're taking that 50 years ago, people didn't get the news like they get it now. I mean, people really in America had no real idea what was happening in Europe during the 30s when Germany and all, they had little newsreels that would show up in a movie theater or a newspaper. But you're right. Sometimes I think there's too much information. But nevertheless, You cannot argue that most things you would ask people now have moved in the wrong direction. That's why polls here in the U.S. show 7 or as much as 8 out of 10 Americans think America's going in the wrong direction. And you know, I find it hard not to. Yeah, I think you have to agree with them.
Yeah, definitely. So if we talk about the you mentioned that you think the stock market could go down in the near term, but I'm assuming you think that there's some assets that maybe people are underexposed to, or you think that will perform better over the coming years or over in the future. So I guess what assets do you think will help people protect wealth during these challenges?
Sure. I'm not a big proponent. I've never been a big proponent of a big fall in the stock market. What I simply believe is they're not going to perform to the levels that they have before in their performance. And therefore, people who've grown accustomed to that are going to have issues. I think, markets can actually eke out lower single digit gains because there's still, some wealth out there and there's still worthiness to own certain companies. But if I may, and I can only address it here in the US, I don't know how it is in Europe, but here in the US now, it's estimated somewheres of half of all the money that's in our stock market is in passive management, meaning these are not actively traded accounts. These are people that are in an index or an indice or segment, and only depending on what happens in those do they make buyers or sells. They're not concerned about the day-to-day fluctuation of the market. And then the remaining half, about I think is almost 80%, is being driven by computer-driven uh, programs from a wide variety of trading just on news events, stories in news, to algorithms that can suggest a whole bunch of instantaneously selling of futures and stocks versus this or that. And those people don't even care what the name of the company is, probably don't even know the name of the CEO of the companies that they're involved in. So the market that I entered 40 years ago, where 90% of the volume was individuals and people were buying and selling stocks to be individual owners of companies, that's a totally changed vehicle. So I do think there's still going to be industries and places you can invest in. 3 years ago, it was very tough. I got involved for the first time ever in uranium. It seemed that this energy crisis was real. They needed an alternative other than what people grew accustomed to, even though for a lot of bad years, uranium was like a curse word. No one really wanted to hear about that. Now, of course, it's proven to be correct. I think the next area that's going to be is if you're going to want all these things that the world is moving towards with electrification and all, we better start finding a lot of metals that are going to be needed in order to justify and have the products and all to achieve all that and all. And we've seen in the mining industry a tremendous drop in capital expenditures looking for new metals. We see now a much smaller scale where those mining companies can feel safe to go look for and develop and spend billions of dollars. Look, a company just spent, I don't know how much, billion or whatever in Panama, and is basically having the mine taken away from them. And I think you're going to have to think twice if you're a major mining companies. And then even if you look at the energy sector, here was a president that took over, and as soon as he took over, the the worst people in the world were the oil people. They were blamed for everything. So if I'm an oil company and you're claiming you're going to get to a point where within less than 10 years you don't even want gas cars and all, and you want me still to go out and spend billions of dollars to find new deposits of gas and oil, only that in 10 years there's going to be no need for it. So they might have put the cart before the horse and all this desires for electrification. And I think there's going to be a lot more challenges to get to those levels. And then there's the big argument, which I don't know what side to be on to tell you, whether or not there is global warming and climate change and all. We're moving as if it's the world's about to be a disaster, but people have heard that for a lot of years, and there's a lot of scientists that say it's not anywhere severe. So there's always opportunity in those, but for me right now, I would be restricted to the metals because they were so depressed. They went through a very bad year, but a lot of companies have worthy assets, but they've been priced way down. And I've always been a contrarian. And if there's ever been a claim about Grandich, and that was that he tended to be too early. I've heard people say, Peter, you tend to be too early. Well, a guy told me a long time ago, almost 35 years ago, he says, you'd rather be a year too early than a day too late. So I don't have too much fears of people got exposures to mining now, but I'd be very concerned if they started to look at high technology, or AI or something like that. I mean, much of the money that was going to be made has been made in those markets.
Yeah, it's a good point. So, what type of metals would you be looking at, or do you think would perform?
Well, there's no question that copper is going. If you're going to believe the electrification story, you can't get around copper. Copper is a critical metal in that regard. Uh, Lithium has probably come back now. I've certainly, for the first time, I didn't participate in the first go around. They went out to the outer limits. A lot of them have come back now, and there's a couple companies of interest. I think that's of value. But there's also other metals. Zinc. Zinc is a very important metal in Ireland now. A company's made it's one of his largest shales called the greatest discovery that no one knows. So I think you got to look at, things like that. And probably the safest point for people is to buy some of the exchange funded funds that own a bunch of these. So you don't try to decide which ones are right and end up buying the one that's actually wrong while eight others go up, but you had no exposure to them. So unless you're very sophisticated, or the person that or group that you're listening to is, exchange traded funds, and there's still some reasons to own certain mutual funds as well, are our way to go to approach that.
Yeah, no, good point. Thanks for explaining that. So, if we go back to what you were saying about BRICS, and you think there could be, I guess, a major schism in the next few years, and maybe the BRICS are putting pressure on the West. I guess my one pushback on that is that the West is the major consumer of a lot of the production from BRICS, be it energy, be it manufacturing, etc. So, can the BRICS survive without the West, and can the West survive without BRICS?
Well, my personal opinion is some of the West, I think, is going to creep into that. You know, people didn't realize when the French president went over, and basically, I think when push comes to shove, there's going to be that nationalism again, whether Trump's in again or not, or that kind of stuff is. And I think they're going to have to be more open, the West. I'm not looking for the end of the West. I'm not looking for the end of the dollar. I'm looking at a worthy opponent now, or a worthy adversary, that's what's going to happen. In the U.S., which always lived off its dominance, both military and otherwise, is no longer going to be able to count on that. And that's going to be a major change for people. And it's very difficult. It's one of the reasons they got away with such high deficits, because they were the reserve currency. Any changes to that, we've seen a slow decline in the amount of people that use the dollar, but it's starting to accelerate. And what's real interesting is we're starting to see some of the key members of those BRICs very aggressively liquidating U.S. assets, and at the same time acquiring large amounts of gold. And so I think whatever the BRICs come up with, whether regional or worldwide, and I'm not expecting them to say, well, we got a new world reserve currency, get rid of the dollar, but I do believe that they're going to want to show some solid backing to whatever form they decide to go on. And that's their reason for owning gold, because gold's going to play a role in that. How big it is, what it actually does, I don't know. But I know this, they haven't bought all this gold for a trade or just a speculation.
Yeah, it's a good point. And I guess people would maybe say China are struggling economically at the moment as well. But as you said, this could be something an issue that everyone faces in the future as well.
I just think people got too used to China growing so fast and so big. I think they got to the point where that wasn't just going to be. And quite frankly, they're going to have to lean more to the capitalist side and not the communist side if they want to maintain their control and grow. The younger people have now a taste of Western society. They're probably going to have to, if there's a battle coming in China, the hardliners versus the youth may be it, but enough hardliners are dying off that I really think China is not going to be the big total monster. Look, there's no reason for them to want to see the destruction of the United States, and so much of their products that they make is sold in the United States. So it's not that they want to destroy us. They may want to certainly influence, or they certainly may want to feel that they're not influenced by us as they once were. But I don't think that they're looking to get into a world war and you know, toss nuclear bombs at each other. Where I do see issues like that of more of concern is in the Middle East, because there's people there with such hatred versus one versus another, and some that think that their God or their deity, whatever you want to call it, actually rewards them for doing what they do. Now, that's far more challenging than I think China versus the United States. I believe it or not, I feel less risk in that than something coming out of the Middle East that can really cause, World War III or something that really changes the scope of the world.
Yeah, it does seem like there's multiple flashpoints that are occurring throughout the world, in Europe, in the Middle East, now, and potentially in South America as well. So there's definitely seems like it's a more dangerous world that we live in at the moment.
Well, it is because we have weapons, A, that are far more destructive than they've been. And then we have issues that are worthy to be concerned about. You know, I still think one of the big fights will be, and you'll be certainly around. I don't know if I'll be, but you look young enough to be. And that water is going to become a big issue in the world. It's an issue that is being overlooked with everything else. And yet people who know say that there's going to be a huge challenge for the big part of the world to be have adequate water supply. And and I'm not here to talk about the World Economic Forum and its takeover and all. I think the simplicity of just food and water and shelter here in the United States, our food banks. Not only are there so many more people standing online, but people working with higher incomes that are now have to be there and all. And you can only overlook the masses for so far and be insulated at the top of the pyramid to the point where there's so many down there that they point to the top of the pyramid and said, let's get them. And I don't think we're there yet, but we're moving toward in that direction.
Yeah, it's a great point. So, Peter, thanks again for your time today. I really appreciate it. So, my last question is, what is one message you'd like people to take away from our conversation?
So I changed a lifestyle 20 years ago. I'm in this 40 years. I developed a less is more attitude. I paid off debt. I don't believe in debt. I live in a lesser dwelling than I could have. I don't drive as big a car as I might have once at one time. I think those things are just appropriate. And for me, my faith became an important thing. But I think even if my faith isn't correct, that it's not real for what we believe in, it's still a better way to live. And I really think morals, something that no matter where we were in the world, nationalities can point to parents and grandparents. They were just more upstanding as citizens and as humans than we are now. And I think if we're going to start, and if you're really going to believe in peace in the world, and we're going to sing joy to the world as Christmas approaches and all, the only real hope for that is that we need to lessen our desires and be willing to live and really where we can help each other. Tithing is, I think, one of the greatest gifts humans can do. It's not always necessarily in money. It can also be in time and energy.
It's a great message to take away. So, Peter, thanks again for your time. I really appreciate it. So, if anyone wanted to find out more about what you do or your work, where would the best places for that be?
Well, there's a website, petergrandich.com, but I do spend the bulk of my time now on X. And I have trouble saying that. I tell everybody that. Twitter, I don't know why we changed the name, but I tend now to use tweets as my best single way to communicate. But I also have a YouTube channel and a website and a blog there.
Perfect. I'll put that on the description below. But thanks again for your time.
Thank you, Anthony.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.